What is going on, guys? Welcome back to another video. Today is going to be a special video because I'm going to give you some education, some free 99 from YouTube University. So I'm going to cover a few things today. By the way, if you're new here, you want to join our community, our Discord link is pinned in the comment section below. Once you click the Discord, you'll pop up over here, create a username or log into your current existing Discord, and you'll be popped up to our main chat right over here. Once you get here, and if you do want to participate in our small account challenge, all you got to do is just ask. We'll put you into the alert section right over here. There's currently around 700 people on the alerts and over 1,000 people on the main Discord, so you don't have to participate. We'll welcome anybody, no matter what your experience levels. You could be a beginner, you could be an expert, we don't care. All right, so let's cover the market real quick before I hop into anything else. It looked pretty promising in the beginning. It looked like it was gonna go. It just looked like it was gonna break out to new highs, which it kind of did. Not all-time highs, not coronavirus highs. It was close. It was about $1 away. I'll cover that, the technical analysis, in just a moment. Today was a tough day. No matter what you did today, more than most likely you lost money unless you just timed this perfect. Now, what you saw here, this over here did not seem to be random. There was a bunch of clues that were given that the market was going to sell off. Primarily, the biggest clue was the VIX. So the VIX, again, was kind of flat throughout the day, but was never negative. It opened green and just kind of went along and kind of just made newer highs throughout the day and kind of gave a signal, wait a minute, why is the VIX rising when the market is just blasting? I mean, the market was making big moves. We were up almost 2%, 3% on the Dow itself. So it was really big moves. What happened? Of course, news came out with California closing. Was that expected? No, because, we knew that corona cases were reaching new highs. So it was basically a matter of time before something like this happens. But I want to give the clues and kind of the expertise on why I saw this coming, what I did to take advantage of it, and what gave confirmation. So the VIX was very important in the beginning because it just stayed green and just kept chugging along. As the market was rising, the VIX was rising. Now, this is a very rare moment in the market. When the VIX rises, typically what this means is that there's put buying, which is hedging your accounts. Again, when the VIX rises, it has to be hedge funds. Nobody else can move the VIX besides hedge funds. No retail traders, nothing like that. No Robinhood traders can move the VIX besides hedge funds. So they were protecting the portfolios because news was coming out, even though the market was going up, which is very rare. Banks in the beginning were leading. If you take a look at XLF, it was just leading in general. It was just leading. It just popped up and just kind of led all the way up to the new rallies, and of course sold off at the very end with the rest of the market. But there was another clue that I saw, and that was the play we did with TLT. Now let's take a look at the alerts here. The market opened. I said, let's get some TLT puts. Now, if you're not familiar with TLT, I covered it slightly on the previous video, so check out the previous video if you're new here to get an idea what I'm talking about. But anyways, we did a TLT play. Take a look over here. So TLT kind of opened up and just made new lows, and it kind of just chugged along higher and higher and higher as the day went on. So I cut the play off right over here. It was between, let's take a look here. So we bought this for 33 cents. I bought 5 more for 29 cents, and then we basically sell TLT, and we sold around 212, which is around 20 cents a contract that we sold for. So we took a little bit of a loss. Wasn't nothing major. I mean, we lost maybe like 200 bucks in a play. We didn't go too deep into the play, but I'll cover that in just a moment as well. TLT was just chugging along higher as banks were going up, which is very rare. So typically when TLT rises, now again, if you're not familiar with TLT, it's a 20-year treasury bond, and basically if the market rallies up, bonds typically sell off. So the VIX was rising and so was TLT, which was a very weird, and at the time I'm trying to put this together, this is weird. This is not how TLT is typically supposed to act. Now, if you look at a 15-minute chart, you'll see clearly that TLT on Friday made a new high and kind of sold off throughout the day into the weekend. And it was weird. So we took advantage of this. We made some money on this on the play here. And again, it looked like it was going to continue the downtrend. However, it bounced up, which is weird. So typically doesn't happen that way. When the market goes up, TLT usually goes down as well. It's not 100%, but usually it's a good signal. So when TLT was rising and when it went positive and the VIX was shooting up, I mean, this was just a clear signal that a sell-off was going to come. However, the markets are irrational. They just did not want to sell off, and Apple was almost hitting 400. I mean, it was just crazy, but the sell-off did happen. A lot of things got clapped. It looks like the futures market might be up a little bit today, but coming tomorrow, there's going to be bank earnings. Wells Fargo, JPM are going to report, so we took advantage of that as well. Instead of playing them directly, what we did is let's play bank ETF. So XLF is a bank ETF. It's like 90% banks in it. So we took that play at the very end. So we basically paid around 51 cents a contract we got filled, and we bought 5 contracts on that. So we made a little bit of money on that, and we lost on the TLT play. So we covered that. It's a good thing that we covered it. Now I want to cover something else. So when we throw plays on the alert section, right, you can do whatever you want to do. But this is what I suggest. Again, there's a disclaimer, and I'm not going to read the disclaimer because I'm lazy. But again, options are extremely risky. We're not licensed to give you any advice. You do your own due diligence. That's basically what it comes down to. So when I throw a play on the alerts and you see it, that does not mean go buy, 20, 30x the amount of money that we put in. So if I'm putting $200-300 into the play and you're putting $2,000-3,000 into the play, those losses are really on you. You cannot blame nobody else. You can't say this. You can't say that. It happens, unfortunately. You cannot make money every single day in the market. There is not one person that I know who makes money consistently unless you're selling put cover calls, even today. So if you saw puts today, you probably got screwed at the very end as well. So again, you must have been really lucky to buy puts right about here, right about the 1 o'clock, 2 o'clock area. If you did that, you would have made a bunch of money. And the signals were the VIX, TLT was shooting up, bonds were going up, which was crazy. It was just acting really weird. The market was, again, digesting something. And at the time, we can't tell, obviously, until it transpires. But again, moving forward, so we bought the XLF puts and decided to swing them. Now, this was at the very end. Now, why do I want to play bank earnings? Well, because multiple reasons. Banks are not making any money right now, 0% interest rate. Now, again, a lot of this stuff is priced into the price of the banks, but recently, banks had a nice little run up between yesterday and today. It ran up a decent amount, obviously sold off today, but we caught a little bit of the sell-offs. Unfortunately, we didn't catch all of it. But again, moving forward, Wells Fargo is going to report, JPM is going to report. Now, again, if you play these options directly, you're going to get killed, right? Because the move is not going to be significant enough for you to typically profit when you play earnings. You may even catch the right direction, but IV and theta are just going to destroy your contracts regardless of what happens. So playing earnings, it's really tough. You may win sometimes, but most of the time you're going to lose. Take it from experience. I used to love chasing earnings. It's earnings seasons. There's a better way to play earnings, and I'm going to cover a little bit of that as well. So tech is going to start reporting soon. It starts out with banks. Typically, banks will give us the economy status, their outlook and their guidance forward. We know that the numbers are going to be shit. The market knows that. What really comes down to is guidance, what the banks are going to say, what they're expecting, and all that fun stuff. So it should be really interesting. Tuesday morning, futures, it really doesn't matter what they do. They can rally up all day. As soon as banks report, the market's going to move one direction. It's going to be up or down. Take your gamble. Unfortunately, it's just how it is. It's really tough to really trade in this market. That's why I always say go small, don't go big. You don't need a lot of money and options to hit. If you want to take $10,000 into a call or a put that's going to expire in a matter of a couple hours, you can do that, in a couple days. It doesn't matter. You're taking a really high risk, high reward. It doesn't take a lot of money to make a lot of money in options. Clearly, today was a perfect example. If you would have bought calls today, chasing, I saw somebody say about 420 Apple calls. Of course, you bought those at the very high because thinking that it's going to go to 420, right? It looked promising, but again, the rug pull is imminent. All the flags were there. Unfortunately, you're watching this and you lost money today. You're not the only one. Trust me, a lot of people lost a lot of money today, and it just comes down to your patience. It was really tough because you start when the market opens, 1%, 2% higher, and you're chasing calls. It's just a matter of time before you get killed. But guys, I'm going to keep it really simple today. Let's see what transpires tomorrow. Like the video, subscribe, join the community, and I'll see you guys in the chat room.